Okay, so let's dive into today's session. We're going to talk about some earnings, but before that, a macro level scenario which shouldn't be surprising to any one of us because based on what we have seen central banks' response to the COVID, this is nothing but all expected. Inflation is consumer prices jumped 6.2%, which is the biggest surge in 30 years. And everyone knows that this is not the right figure anyway. Core inflation, stripping out the food and energy, was up 4.6%. If you increase energy, home prices, vehicle, it says it's 6.1% overall. And it means if we are not getting an increase in our wages, at least 6.2%, we're actually losing money. Isn't that's crazy? Look at the fuel prices, up 12.3% for a month. I actually filled a gas and that was $5 I had to pay. $5. And I also saw someone posting on a Twitter. I don't know what state is it, but it was like $8 a gallon. Crazy to think, the prices that now we have to pay for fuel and even for food and all that stuff. Used vehicles, again, they rose 2.5% month on month. If you are lucky, you can actually get a vehicle when you want it. Otherwise, there's a long wait time. Sometimes for some, it has taken a few months. And for some specific models, it has taken a year to get that car. So if you're having a car right now, I don't care what, how old that car is, just hold on to it. And if you're lucky, maybe if you're holding a car, if you're leased a car, maybe the dealer will be able to give you a higher price. And, one of my friend actually was asking the dealer in terms of that he wants to now buy back the car that he leased, and they're not even responding. The dealers are making tons of money on even selling the used cars. Now, though the official number is 6.2, but if we measure it using the same criteria that was used in 1970s or 1980s before the criteria was changed, the real inflation from historical perspective is close to 16%. Remember, we hear saying there were days when inflation was 16%, 17%. There was days when the mortgage was 14%. If we measure and compare it at the same scale, I guess we have the same day. The government has changed the scale on how they want to measure inflation. And that is why now it is showing about 6.2%. But if you don't make that change, it's 16%. So are we back into those scenarios? I don't know. But right now, looks like central banks, they just don't have any option. I just don't see in terms of what central banks can do. If they raise the interest rates to contain inflation, they can't service the debt. What's our debt right now? 24 trillion US debt clock. $28 trillion of debt. We can't service it. So there is no way, of course, there may be a marginal, Fed might raise interest rate marginally by 25 basis points. Anything more, we won't be even able to service our debt. So I think this bazooka of printing so much of money, eventually someone will have to pay the price. And right now we are paying the price in terms of higher prices, coupled by the great resignation theme that is going around. So we have a fewer workers, we have a more job openings than the people looking for the job. and some are, said it is easier to collect benefits because you don't have to work for benefits, but you have to work for wages. So maybe some people are actually taking the easy way out. It's easy to collect the benefits. So why work if you don't? And so that means we got less production. Demand continues to stay the same, or in some cases, demands have gone higher. So higher demand of goods, lesser production. What else do we expect? If not inflation. So, and this whole talk about transitory inflation doesn't seem to be transitory anymore anyway. So we'll see. Sam says bought another Baba contract and somehow after hours China gaming shares. Okay. Car leases have built-in call option at residual prices. Yeah, so I think unlike other models, so the model that I was talking about, my friend, he has a Tesla on lease, and I don't have this first-hand information because I don't have Tesla and I don't lease it. But looks like they don't tell you upfront in case of Tesla what would be your residual price at the end of lease. That's what he was telling me. I don't know how far it is true or not. But so he's been calling dealer to find, he called up to find out, the dealer, wherever he leased it from, to find out what's the residual value and what he can, buy it back, because he doesn't want to give up his car for obvious reasons. If you don't have a car now, getting a new one, it's a wait time. Let's look into some tweets or the charts before we get into the real meat. Is from Sahil Bloom. I actually started liking this guy. He posts some nice stuff more around the mental preparedness, more around behavioral science, I would say, and which is, in my opinion, is a very big part of being a better investor and a better human being. One which caught my attention is, have you ever noticed that the most argumentative people really persuade anyone of anything? The most persuasive people don't argue more. They observe, listen, and ask questions. Persuasion is an art that requires a paintbrush, not a sledgehammer. For me, it took years to actually understand this. While growing up, when we were kids, it used to be whoever shouts the loudest will be heard, or and whoever speaks the most will rule the table. As we grew, as we become more experienced, we realize that's not how the world really works. And I agree. It's how much you observe, listen, and ask question. I think that's the crux, which has got more power to persuade than the volume of the voice or the quantity of the words spoken. Another one from Prof. Feynman. 5 great signs of intelligence. You're not afraid or ashamed to find errors in your understanding of things. You take mistakes as lessons. You don't get offended with accepting the facts. You're highly adaptable and very curious. You know what you don't know. I think all these 5 are very, very important to become a better investor, because we have gone through, during our investing journey, we go through bad decisions, or it's a picking up the wrong stocks or making wrong trades pretty often. You can't be right always. So there will be chances when we'll make a wrong decision. And I think that the right thing is to learn from the mistakes. And more important, be aware what we don't know. I think there's equivalent to this. There was another saying. What kills in investing is not what you knew and had gone wrong, but what you don't know and think that you know about it. That's what kills investors or the portfolio. Things that we are certain about, but we actually, in reality, we have actually no idea. We're kind of completely blindsided by the fact that we don't know, and we assume that, hey, I think I got it. I think I know that this stock is going to go high. I think I know that this market, tomorrow, how the market is going to react to. Very important from being an investor. Be humble. Markets can surprise, and just be ready with it. That's all. And lastly, this was a little funny as well. If we can comprehend crypto, it's okay. I mean, we are model human beings. When a Nobel Prize winner, Paul Krugman, he couldn't comprehend what the internet is. Well, it took years. Well, that's okay. We'll take our own time to understand the new crypto economy. The growth of internet will slow drastically as the Floyd-Metcalfe's law, which states that the number of potential connections in a network is proportional to the square number of participants, become apparent. Only saying that the flaw will become apparent some part of a time. Most people have nothing to say to each other. Anyway, by 2005 or so, it will become clear that the internet's impact on the economy has been no greater than the fax machines. No greater than the fax machines. And so glad that that the folks didn't believe in what Paul had to say. He's a Nobel Prize winner economist. So, but sometimes they too get wrong. So if all we are looking at is, I can make sense of, I don't understand why would this whole movement towards decentralization would ever work. It is slow. I don't think there's a need for this. I can't find the use cases where it is being used. Why do we need to even have an Ethereum-based settlement layer when everything else seems to be working fine? Why do we want to change it? It's okay. We don't get it. We cannot understand all the use cases right now. It's fine. The only thing is just let's not dismiss it. Let's agree that it doesn't make sense right now, but be curious about it, to keep our eyes and ears open to just see, what it might bring. Not new technology, especially the ones which are, once in a generation, kind of like internet type of technologies. It's very difficult to comprehend the impact of it because we can't even think in that scale. The scale is completely different. Human mind generally thinks on a linear basis. It's very difficult to comprehend an exponential or things that change on log scales. Internet was one of those things. Now, the decentralized side, crypto side, is probably the next movement after internet. So it is not easy to comprehend, but let's make sure we don't dismiss it just because we don't understand. All right, let's talk about a little more around investing. I came across another chart, which was the number of S&P stocks, 5 S&P 500 stocks that are trading above 10 times sales. It used to be a very exclusive club if you have a 10 times sales valuation. In 2011, Bill Gurley, very famed venture capitalist, invested early in companies like Tesla, companies like Mercado Libre, and some of others. He wrote very extensively a big article on the 10X Club. How very few companies actually get into the 10x club from a valuation perspective. Now, if you really look at this price to sales ratio on number of S&P trades above 10x, it's like 73. This used to be an exclusive club. In 2000, at the height of the dot-com, there were 40 companies in S&P 500 that were part of this club. So we are almost double of it. It's today. The way at least, I'm seeing people talking about the stocks, chatting about it. I'm seeing in some chat forums, people pasting their gains. Okay, I made this much doing a day trading. This particular EV company is coming IPO. I think we're just gonna make some good amount of money on that. It just reminds me of the same euphoria, same exuberance of this .com. And it is very difficult to keep our mind sane and say, I'm not gonna give into that FOMO. Oh, especially when you see the markets making new high every other day. But eventually this music will stop. Things don't always go in this parabolic fashion, always go up. And we have seen in the past, probably we will see it again. Though the things are a little different, we've been in terms of how the Fed has been backstopping, but right now, looks like the Fed also doesn't have too many choices left. So let's be prepared for what could be the next. Again, similar when talking about exuberance, especially from a retail investor's perspective, it's a risk on period right now. So here's another chart which talks about the daily notional value of call options. Mostly it's call options, which means, and on a single ticker, on individual stock tickers, the daily notional value of the single tickers, that generally tells it's mostly retail investors, because professional, most of the time they deal with indexes or the big ETFs. It's a representative of what the retail investors are doing. Single stock daily notional traded dollars is 894 billion. In October, it reached that peak. And I saw Sam saying he bought another BABA contract. And many people who are buying a lot of call options, because it's a risk on. I think it's going to go up. And we want to take that gamble of buying a call option and trying to benefit from it. And that call option will benefit only and only if the stock goes up. Let's look at another one. This is one more around or maybe I don't have that, or probably have it here. Okay, it's here. FOMO, the cash is flooding into the options on individual stocks like we talked about. So this was the monthly notional value. Notional value means, let's say if I bought a call option on say $100 stock, I bought a call option at 50 delta, it's $100 stock. The notional value of that call option will be 5,000. But I might have paid $5 as a premium. It means $500 as a premium. So if you look at and add the total premium, last week, $27 billion was spent in just premium buying last week. And mostly, overwhelmingly, those are all call options. It's like nothing can go wrong right now. Everything is hunky-dory. No one wants to buy the puts for protection. I'm not saying that the puts work great for protection, but even if it's not the best instrument to protect the portfolio, it is a way to protect your portfolio. May not be the best, may not be the optimal way, but it is a way to protect a portfolio. For individual stocks, retailers, looks like retail investors see that this is nothing that can go wrong in the stock market. And we've been piling up on these call options. What we are seeing in the markets over last few days, and we've seen that the markets have made like all-time highs, though there was a little weakness on Friday, but it's been chugging along. Yes. Be careful. If you are trying to take only bullish trades at this point of a time, just understand that it's already on a multi-year high, and mostly a lot of an exuberance out here with a lot of retail investors just buying call options. And many of those retail investors probably had their first taste of investing in 2020. So to be aware, someday, markets will come back. Markets always doesn't go in one direction, and let's be aware of that and be prepared for it. Right now, I see a lot of FOMO, especially caused by these new IPOs. We'll talk about one today. $0 revenue, and its valuation is what, 100 billion plus. It's all hope. Some of those stocks are running on hopium. This is nothing more. And I don't know, we don't learn the lesson. We already had that in 2020 in some of the companies, but right now we're back into the same mode of the sector might have changed, but into the same exuberance mode. In 2020, we saw it with the SPACs. In 2021, right now, we are seeing that same FOMO with EVs. Russ says, all these seem like canary in the coal mine. Yeah. To me, it does. It doesn't mean that I'm going to become bearish. I still want to play in the market. If the market wants to go higher, I would want to benefit from it. But idea is, hey, let's make sure that we give ourselves a little room for error. I'm at least not saying that the market will suddenly drop 5% or 10%. It may or may not. But at least I want to give myself error that if I want to do a bullish trade, first of all, I don't think I'm doing too many bullish trades anyway. But even if I want to take a bullish position, I want to give myself a little room saying, oh, I think it's already too hot. Even if it cools down or doesn't move, I should still be able to make some money. I don't want to fight the Fed. I don't want to fight the momentum in the market, because no one knows how long will it continue. Sometimes the markets can stay irrational longer than your what was that? Your account can stay solvent. So I want to be in the market. I'm not taking anything out of the market, because that's generally doesn't work. Timing the market doesn't work. But yes, we can position our portfolio thinking, where is the market right now? And do I want to be a little aware of it and not become overly bullish at this point of a time? Steve, did you say hopium? Yeah, that's exactly. It's a combination. That's what I think the markets are right now running on. Especially some of the stocks that I'm seeing, they have no products, nothing. It's only hope. a favorite drug of traders. Yeah. And not just the trade, I mean, both for the stock traders as well as I see that term being used on the crypto economy as well. What could be some ways to look out for a market turns? I don't think market will give us a one signal saying if you find this, it means I'm turning back. I think if we are getting it's like a frog being boiled, in a pan, right? It's slowly we are seeing a signals of inflation going high. Fed is starting to taper. They will start to increase the interest rates, and some of these zero revenue companies, some of these all non-profitable companies, no profits, at some point of time, realization will set in, saying, why am I paying so much for the companies that don't make any money if I can also earn some return on without taking that much risk? Today, there is no other option but to take that risk. But if the interest rates start to tick up, or if the bunch of the group of retail investors who've been buying all these call options, they find something else to do, or they get disenchanted, markets will turn back. Another chart. Again, low interest rate fueled stock market rally. In 2019, stock market was 27 trillion. Right now, we're looking at 54 trillion. This has been the steepest increase in the stock market after the initial, March 2020 crash. I hate to say that as a crash because, hey, it lasted only for what, a few weeks? You can't call that as a crash. It's like just, hey, we had a crack and then we just jumped out of it. But whatever, this has been the steepest rise we've seen in the markets. 27 to almost double. Did our economy double? No. It's just that the stock prices have doubled. The amount of money that we're paying has increased. The returns may not have increased. The profits may not have increased. The company's growth probably has not been in the same, hasn't increased at the same pace. But the price that we are paying for the shares have increased. And so, and also the number of retail investors talking about and bragging about their gains and their quick wins that have increased as well. I didn't see those things in last 4 or 5 years, but I would say in last 2 months, I'm noticing more of those things. Ross, read somewhere that COVID drop cannot be classified as correction. Technically, it would, because it was down, 35%. So technically it was, but yeah, we shouldn't call it as a correction if it lasted only for a few weeks. So as I'm looking at all these numbers, I have not been bullish on markets for many months, and market has proven me wrong. I'll be upfront. I've been not bearish, but I've been not bullish on markets, I think, for the last 6-7 months, and have not brought in any additional capital since then. All additional capital has been moved on the crypto side, but I'm holding cash. But I've been proven wrong so far. But I think I still, even now, I can't become bullish on the markets. And that's my personal taste. And I'm not going to go and do a lot of bullish trades. Does that mean I'm going to sell the stocks? No, but yeah, I'll become a little more aggressive in selling calls or call spreads and in reducing the cost basis.
Vivek.
Yeah.
You don't have to be bullish on the market, but the individual stocks.
Yeah, individual stocks. If you really find some great companies, I'm so generally what I do is if I have bullish position, those are probably on individual stocks where I've spent some time. I know that those companies are good. Some of them have even been pumped up by the rising tide among the markets. But at an overall market perspective, I'm not taking any bullish. I am not buying or anything at a market level, let's say S&P 500. I'm not taking any bullish position on that. Cedric, are you mixing crash and recession? 2020 was not a recession, but it was a crash, don't you think? I forgot the definition, so I could be mixing it, Cedric. But there is some tech definition around if it is a 20% down. Is it called a crash? Is it called a recession? Technically, it is called recession, but I could be wrong.
2020, it went down just for 2 months.
Yeah, it was down 35%. So I think
just for 2 months, and then it went back up, and then starting in November, they had a bubble.
Yeah, I mean the bubble has been growing, so we don't know how far and how big this bubble can grow, and we only get to know if it is a bubble only after it pops. So I wouldn't call it as a bubble just yet. All I can say is that there is everything. All the numbers point out to be there's a lot of one-sided trades, which is that hey, it's all going bullish. The market's gonna go up. So whenever generally once we have only the one-sided trades, we have seen that doesn't really end well. And I think that's the thing that we need to be just cautious about. Right? We'll not know that it is a bubble unless it bursts. That's a sad part around the bubbles is you don't know it before it bursts. And by the time it bursts, if you haven't been prepared for it, sometimes it becomes too late. Right? Okay, so another one which I saw, first I saw news on CNBC saying Twitter has launched Twitter Blue. Let me just read the comment from Ross. Watching international markets and came across some IPOs in India. Oversubscribed by 380 times. Yes. So in the way it works on India is a little different than what it works on the US side. And that was a learning lesson for me when I moved into the US. In India, the companies when they do IPO, I hope that that's how it still works. But anyone, if I don't trade in Indian market anymore, but anyone out here trade probably can correct me. But I can share my experience how it used to be when I was active in Indian stock market. So when a company goes an IPO, they reserve a certain portion of shares even for the retail investors. So when I log into my stockbroker account and I say as a retail investor, I want to buy certain number of shares and this is the price I'm willing to pay. You see a price range. And then based on how many retail investors are willing to buy the shares, you get your allocation. So if there are 100 shares available for the retail investors and 5,000 people have applied for it, then it means, hey, that's been oversubscribed 50 times. So this is pretty common. I've seen, shares of some good companies or shares of well-known conglomerates, used to be those cases, would generally get oversubscribed a lot. When I moved to US, that was the biggest shock because I wanted to subscribe to an IPO and I just couldn't find it. I'm like, how do I, as a retail investor, I could get that IPO, and then I had to figure out that the stuff works completely differently in US because I couldn't find it. I had an account with a Scottrade. I couldn't find it. Where do I subscribe to that IPO on a scottrade.com? And I'm like, why can't I do this? But yeah, it was a learning lesson for me. And then I had to figure out, okay, it works a little differently in US. It's mostly the banker's friend who can buy it. So in India, IPO is literally giving stocks to retail investor before public listing. Yes. So like the bankers, they in the US, the bankers can give the shares to their institutional investors. That also happens in India because some portion of the IPO offering will be reserved for institutional investor. Some portion of the IPO offering would be reserved for retail investors. So it's not that only the institutions get in at the IPO price or the initial range. Uh, Retail investors can also get in at the same price. That's how it used to be. I don't know if that is still the case or not, but when I was active, that's how it used to work, which I would say was a little ahead. When I came to US, I thought, oh, I've gone backwards as a retail investor because I can't buy, say, a Rivian at $78 anymore. As a retail investor, I have to buy a Rivian at whatever it started trading 120. Saw something on Twitter that they are launching a subscription service. Twitter had talked about it a while ago. Now it looks like they are actually implementing it. And then yesterday evening, I actually received an email saying, ready to take Twitter to the next level? Meet Twitter Blue. So this is again their another way of monetization. Today, Twitter is entirely dependent on their ad revenue, which their ad engine wasn't that great 2 years ago. But last year, I think around July, August timeframe, they rolled out a newer version of their ad engine. And then they started seeing a lot more traction on the advertising, and which is good that they have one, I would say, one revenue stream. But ads on Twitter are intrusive. So they have to find another revenue stream. The next one is Twitter Blue. Pretty cheap. Cost around what, $3 a month. And you get some of the features and functionality that you don't have access to right now. One of them is undo tweet. So if you're, when I started becoming active on Twitter, I realized, oh, I can't undo it, or I can edit the tweet once you have, press the send button or tweet. You can't edit it. Only thing you can do is delete. So then I had to be really careful, make sure I can press the right key before I send it. But now you're going to have a customizable timer up to 60 seconds to preview, undo, and make changes to your tweet. I think this itself is really an attractive proposition for those who are very active on Twitter. Just this, which means you have a time to go back and customizable time up to 60 seconds to preview it or undo it before it is sent. So you got a way to edit the tweet. You got some time to edit the tweet. Another feature is you can get the news without the noise. So it is easier to find and follow the news and conversations you are interested in with top articles and read ad-free on the sites of some of your US news and information websites. So they are tying up with some media outlets and will be able to read some of the news and the articles without any ads. You can also customize how your Twitter appears. And lastly, you can get access to the new features. I think the top two probably for if personal side, these top two probably are the ones which are more attractive to me on, for paying for this service. So they have been testing the subscription on Australia and Canada, but now they're opening it up for US as well as for New Zealand market. It will cost $3 for Android and for iOS, Android, and web users. And Twitter will pay a portion of user subscription to the participating news sites based on what the users read, and not based on what how much money the other people are willing to pay. So the subscribers can see the impact of their reading habit through a transparency feature. So you will know if you're reading a news article, how much money was sent out to that news and to that media outlet. I think it's interesting. $3 is something that those who are tweet very often, who are very active on Twitter, I don't think that will pinch them. More importantly, if it allows them to have an ad-free experience, that is great. It also should be longer, like WhatsApp, 30 minutes. Humans realize their folly much after 60 seconds. So, and again, this is completely my guess, right? Twitter could have given this feature of editing or undo your tweet right from the get-go. But it's like they created this scarcity and now they're charging for it. Who knows that they might come up with another subscription tier which might allow you to go and modify it maybe a day later, rather than giving up all that we want upfront. Again, just a speculation. But like, you can go and edit your posts on other social media sites. Why can't you do on Twitter? No, they created a sort of a scarcity. Now suddenly this feature looks valuable to us on Twitter because we didn't have it. And now folks may be willing to actually pay for it. So Ross, maybe they'll come up with another subscription tier which says we'll give you these additional things. Plus you can go and edit your tweet a day later, but you got to pay $5. Who knows? I'm just speculating about it, that some things that they could have done and given it for free, which is undo your tweet, delete your tweet. Now they're able to charge for it. It's artificial scarcity created by Twitter. I see a question from Via. How can regular investor get access to IPO in US? Where do they offer IPOs? So now I'm seeing that some of the stock brokers that are actually providing access to the retail investors to invest in IPO. Robinhood has got a feature called IPO Access. So if you have a Robinhood, you'll be able to go and see what IPOs are coming up, and Robinhood is offering what IPOs are on offer for retail investors to participate in. Again, do your own analysis to see whether it's the right thing to do or not. But if you are convinced that you want to get in at an IPO price, then Robinhood has it. Even Fidelity, I think they also allow retail investors to get access to some of the IPOs. Not all.
Vivek,
but you do see some, at least I get notified saying, okay, these stocks IPOs are available. I'm different. I don't want to apply that IPO price anyway. So, but in US, I'm seeing some companies have started doing it from 6-7 months ago. I think Robinhood did IPO access, then it's a Square or not, SoFi. SoFi also came up with that offering for allowing retail investors to participate in IPO. So probably it will become more common in US as well. Monetization necessary evil of our times. It's a capitalist society. I don't call it evil. I mean, this is a structure of the society. And we chose this structure. Came across ground news. They tag the news is more red or blue. That's interesting. Need to be accredited investor on Fidelity to get access to IPO. Or is it? I don't know, because I've never filled up any form saying that I am an accredited investor. Or maybe, I don't know, maybe did I get it from Fidelity or get the notifications from TD Ameritrade? Yeah, Sophie had IPO access for Rivian, Sam says. Yeah, so I think even some others brokerage firms also had access for investing in IPO for retail investors. Now it has started to pick up in last 6-9 months. I think SoFi announced it, Robinhood had announced it earlier, but then SoFi actually launched it before Robinhood, then Robinhood launched it, and many other, and now there's a competition, so we should see this become more and more common. Sridhar, have anyone got RH IPO successfully? Most IPOs are seem not very popular ones. Yeah, at least the notification that I see are the ones that I don't want to invest. I mean, I don't think I want to invest in any at an IPO price, but even the ones that come across are the names that I have not heard. So you're right, Sridhar. Well, looks like SoFi had IPO access for Rivian, Sam says. Again, it is not open for all the stocks. You will see it depending on different brokerage firms will be opening up different stocks for the retail investors. Not completely transparent yet, but it is better than having zero access, which is what the case used to be a year ago. Because we talked about Rivian, so I have to bring this up. Who can make Tesla valuation seem cheap? Tesla is what now, $1 trillion company? Going back to, I think it maybe slightly less than trillion right now. We are 995. Who sold Tesla? We all know Mr. Musk sold Tesla. I mean, I don't know. He was just playing with his, let me just sort it with the market cap. Okay. So Elon Musk sold a bunch of Tesla shares. Apparently he was trying to follow what his followers were asking him to do on Twitter. He opened up a poll on Twitter saying, should I sell or not? And they said, sell. And he said, okay, I'm selling. We think that it was because, hey, the Twitter followers told, but these things were already kind of a planned selling as per the SEC filing. So eventually those sales happened, and I don't know, the Twitter share is Tesla share is down 16% from the recent all-time highs, which I don't even know why did it even go at that price, but the valuation still, I can't wrap my head around that valuation. But this week something happened which made me think, I think Tesla is probably cheap. So this is the company, Rivian, look at zero revenue, net income. Obviously, this is just their operating loss because they don't have any revenue. So every cost is a loss. Shares are about $130, more than $100 billion market cap. They made, if I remember the statistics correctly, they made 56 cars last year, sold none of them. So the revenue is zero, but valued at $110 billion. Finviz haven't added that yet in their list, but if it was, this would be the third most valuable automaker in the world, just after Tesla and Toyota Motors. And I mean, if this is not exuberance, I don't know what it is. If this is not hopium, I don't know what else could qualify for hopium. Everyone wants to find the next Tesla and think, and I'm not saying that Rivian cannot become next Tesla. Probably has a potential, but right now it's only hope of that potential. We haven't seen anything yet. Let them sell some cars. Let those cars be on the road. Let them build some credibility before we call it as third most valued car manufacturer in the world. Crazy. But one good thing is, now I think Tesla probably looks cheap, because when Tesla was valued at $110 billion, they actually had real sales. Rivian has no sales. Some also remember Google IPO Dutch auction. Yeah, so there are different ways. So regular IPO, you go through your bankers and direct to institutional investors. The other one is a direct listing, which is what Spotify had done. I think Slack had done direct listing, in which you and I, anyone can buy. It's just get listed on the markets. So I think, I don't know if when Google went IPO, was that called direct listing, or no, the third one, another one, which is Dutch auction. And the fourth one, I would say, is a SPAC. 4 ways to now come to IPO. Ross, Musk had sell orders already planned. He has to. If you think why SEC didn't come after him for asking these things on Twitter, because he already had planned sales, because Musk is the officer in SEC language. Of course, all CFO, CEO, chief accounting officer, and these are the designated officers. And even outside of it, sometimes I've seen in one of my companies, the chief product officer was also officer in SEC eyes. So they have to declare their planned sales and planned buys way ahead before those transactions get executed. So those are all pre-planned buy and sell transactions. Musk cannot do, or a CEO cannot do, buy or sell based on a Twitter poll. Those were already planned. And I think for whatever reason, if the Twitter poll would have gone in another direction saying don't sell, I'm sure Musk would have his team to create bots and switch it to the other direction to say sell, because those are already sold. And not sold, those decisions were already taken, and those forms, I think it's form 4, which talks about officer transactions, that they have to file in advance before those transactions get executed. So those are form filings were already done in September. So yeah, but I think he gave an opportunity to each one of us to put it on our resume that we helped a CEO to on a $2 billion transaction, or whatever, the $20 billion worth, whatever the sale is said. We can right now, I can put it on my resume, help the CEO of a company in deciding $20 billion worth of transactions, because yeah, I contributed to it. That's one good thing that Musk did for me. He was trying to deflect the sale of CEO to Twitterscape, so that the way stock drops much less, that he had sold without the publicity. Yeah. He's a genius, marketing genius, if anything else. What's your thought on Trade Desk? Trade Desk, I've been bullish on Trade Desk. I love that company. It's the biggest on the on the buy side platform, not on the sell side, but it's the biggest on the buy side platform. So on the ad platform side, you got a sell side platform, buy side platform. Trade Desk is the biggest player on automated buy side platform for anyone, for the companies who are buying ads from ad sellers. So Still bullish on trade desk. I think it's done good on the after recent earnings. More importantly, because everyone thought when Snap came out with their earnings saying, oh, we got hurt by Apple's new OS, new restrictions around, how you cannot track the cookies across the applications. So everyone thought that all the companies, social media companies, as well as the companies who are dependent on ad revenue will be impacted. So we saw sudden drop in prices of Facebook, in Magnite, in other ad tech companies. But Trade Desk announced the results, came and say, no, we are prepared for it. It didn't have that much of an impact on our business. So suddenly those who were a little bearish, I don't know how many of them were short and had to cover it. But in any case, that was really a surprise to the market, and market handsomely rewarded it. After the earnings, it jumped up like 30% and some more after that. Right now, it's hit their new 52-week all-time high. At earnings, it was what, $68, $70, not $100, 30% in a week. Now, whether that's too much too soon, probably. But I think from a company perspective, I'm still bullish on Trade Desk. They're the biggest player, and still a lot of advertising dollar will continue to grow, for online advertising. So yeah, I'm bullish on Trade Desk. I do have it on my long portfolio. What else caught my eye? Gold. We don't talk about gold generally, but I think, again, we should be aware, whether you like it or not, there are opportunities, and let's be aware of the other side where we've seen so much of an exuberance on EV players, and not just Rivian. I think when Rivian IPO came around, a lot of other EV companies got a boost. What is Lucid Motors? LCID. Lucid has been up as well. NIO was up, but NIO also announced the results. So we're going to talk about NIO, but not that big hype. But some charging company, I heard about this EVGO from 8 to 18. I have no idea what this company do. Has anyone invested in this one, or maybe gambled in this one? Know about what EVGO is? Is it the charging or something else, or battery? But right now, looks like nothing can go wrong in EV sector. Suddenly, EV has become the next hottest property on the stock market. Oh, Ramesh says EVGO is charging for GM vehicles. Okay. Is that what changed in last 1 week that almost doubled its valuation? I have no idea. So gotta be careful if you're trying to chase these things. Understand what's driving. Has anything changed in the business or not? Similarly, if a stock has fallen down 20, 30%, has fallen down 50%, before you run away from the stock, also understand, has anything changed in the business? Because these movements could be because of many other factors that we have no idea about. And if all we are doing is focusing on the candles, green and a red, and not what the company is doing, we'll just go crazy around it, especially as a retail investor. Or if this is your full-time job, more power to you. But as a retail investor, that is why I don't like chasing candles on the chart. I would rather chase the business of a company rather than trying to chase the candles. Sadiq, it's because of the new bill that will spend billions on charging stations across the US. The new infrastructure bill has given some impetus. But we have seen earlier also, I think earlier part of a year, where we talked about when the Democratic, they won the elections, we thought, oh, everything is, we had a similar rise in EV, in clean energy, in cannabis. Right now, again, we are seeing the same hype. Whether it's going to be double, who knows? So even if you want to take a bullish position, just think so that things like EV Geo has already doubled for now. And what has in the infrastructure has changed so much that it demands that valuation. Yeah, if you have looked into it, great. All my thing is, let's not chase candles. Let's chase what changes this infrastructure bill is bringing in and how EVGO or any other EV company can benefit from it. That's the reason to go bullish. Completely with you, agree with you. And phase energy too. But something that hadn't been glittering for a week, but I think in the last 2 days, it has started to glitter is gold. And again, this is a chart from Crescat Capital. This fund has been mostly very bullish on gold and I would say precious metals. They got a lot of investments in many mines across the world on the gold side. But this is an interesting chart. While we are seeing companies like Rivian with zero revenue, forget about any profits, being valued at 110 billion. If you really look at from the free cash flow yield with the enterprise value, 2020, these gold and silver miners, from a business perspective, have been very profitable, especially in last 2-3 years. Many of them have cleaned up their operations, have reduced the cost of operations. Reason is because the gold wasn't making all-time high. Gold hasn't performed in last 10 years. It's still there where I think it was 10 years ago. So during that period, businesses have to adjust to the reality to survive. They became lean and mean. In the last 2 years, we've been seeing that from business perspective, it's been one of the best in decades. Hasn't reflected in the stock yet. That's a completely different matter. But from business perspective, it is. Let's see, maybe, with this whole inflation worries, we did see jump on the gold miners and gold itself. So if you look at gold miners GDX, this is an ETF for gold miners. Or last week, this has done handsomely in last 1 week. Same is the case with the GLD, which is a gold ETF. Now it has started to glitter. And from a business perspective, had never been great in last few decades. So if the market starts to focus on the gold and the business is anyway doing good, maybe there are some opportunities out here. And when we're talking about things going on fire like Rivian EV, why should cannabis be left behind? I think this happened on Friday? A lot of cannabis stocks were on fire because of a possible bill drafted by first timer in the Congress, Republican Nancy Mace, to deschedule and regulate the federally illegal substance. Right? It's not the first time that we have seen this. Cannabis has been very volatile. At some point of a time, it was, if I look at, say, Tilray or some of the big players on cannabis, at the start of a year, Tilray was almost $60. Canopy Growth, similar around the February, it was around 40, 50 bucks. Now it is now, and again, that was the hope that with the new administration, it will be decriminalized. I don't know if it will be legalized yet, but it will be decriminalized. So if you want to get exposure to cannabis, understand that it is all dependent on the regulations, and it might impact US based companies more than the Canada based companies. So Tilray is a Canada based company, because today a lot of these US based companies don't have access to the same, let's say, banking services that other businesses have. They cannot write off some of the expenses on their balance sheet that other businesses can do, because this is at a federal level, this is a scheduled substance. So if it gets decriminalized, not legalized, there's a little nuance between the two. But if it gets decriminalized, a lot of US based cannabis companies can actually now write off some of their expenses on their P&L statement, which today they can't. But Canadian companies can. So the US based companies probably could have a better tailwind from this decriminalization. US based companies could get access to more banking services, cheaper debt, more working capital, access to cheaper working capital. So if you are, if we can ride this volatility and want to take an exposure, maybe look at some US based companies. I know Tilray is very popular among retail investors, but again, Tilray is Canada based companies, probably will benefit because just from the more consumption of marijuana. But my viewpoint is even the US based companies could benefit more additionally, because now they will have accounting wise and access to capital wise, and the fact that they can actually get listed on exchanges. Today, many of these companies in the US exchanges, you don't see cannabis companies being listed. They are all trading on OTC desk. So all these trailers, they are all listed outside. So that would be the tailwind, but be aware that this is all dependent on what happens in Congress, and that is always a mystery. So we've seen this hope earlier in February. All the cannabis stocks were on fire. Now there is another hope that maybe we'll make some progress on it. So, but be careful. It's highly dependent on what the regulators do or the Congress does. The last one from a news perspective, I guess, before we jump on to the earnings, is breakup season. We saw this week, we saw 3 big companies breaking up into smaller companies. I wouldn't say smaller companies, but I think even if they are so big that even if they break, the individual companies are still way bigger. But they're breaking up. It's a breakup season. Saw Johnson & Johnson announced that they will be splitting into 2 public companies, 2 separate public companies. We saw GE doing the same thing. So Johnson & Johnson is the biggest consumer healthcare company in the world, biggest by revenue. They got all the over-the-counter products that we use in our daily lives. They got Band-Aids, Listerine, powder, Tylenol, and all other stuff. Plus, they got a big medical device and a pharmaceutical business. Now, after the split, the consumer healthcare, which is your OTC business and all that, Band-Aids, will become a separate business, whereas the prescription pharma and your medical device will become a separate company. Now, in a corporate America, now we are going, it's like come full circle from being an individual companies. There were a few decades ago, the focus was on your, working through the full value chain, right from top to bottom, and become a one big conglomerate. We saw the rise of things like companies like GE, which operated in multiple different, it was a big conglomerate, multiple different businesses. Right? The focus was on economies of scale, rather than trying to do, if you become big, bring everything in-house or vertically integrated on your value chain, you derive economies of scale. That was the management mantra of 3-4 decades ago. Now, I think we're back to the core competency. Let companies focus on their core competency. Even if that means that as a company, you probably can't enjoy those economies of scale, which you would have been if you're under the same roof. It's okay, but because individual companies can focus way better on where they're best at. And now the street is rewarding that. I think it's all the game of what the street is rewarding. 40 years ago, street was rewarding all the big conglomerates, those who can focus on the overall value chain, those who can extract, bring economies of scale and make more profits, reduce their costs. Street was rewarding them. Companies were focused on becoming bigger and bigger. Now street is rewarding the core competency. The street is focused on valuing each units of a business separately. And then we see companies splitting their fast-moving, their fast-growing businesses out and, as a separate company, so that they can get higher valuation on that than the rest of the company. And this week we saw 3 more. Sam will say Glaxo is splitting into 2. Yes, Glaxo is also splitting. I think I heard someone. So 3 I'll talk about today. I think Glaxo is already splitting. Siemens split many years ago to focus on core. Now they are even bigger than when they split. If they became bigger because they've increased revenue, great. But they became bigger because they again assimilated a lot more non-core businesses, you might end up into the same problem. Cedric, I don't think it is now versus before. I believe it's a company cycle thing. Look at Tesla. Street is rewarding them for being fully integrated, even across different sectors, because the EV is very new stuff. So for Tesla for any company to operate right now, EV is a new sector, and that's what street may. Let me eat my words. I don't know what is street rewarding Tesla for. First of all, street is not rewarding Tesla for an EV company. It is rewarding Tesla for a software company. So let's get that out. Because when I talk about Tesla valuation, how come it be rewarded so much? It's not a car company. Why you're saying Tesla is an EV company? Tesla is a software company. So I can't even wrap my head around what the street is evaluating Tesla for. I think so I don't even want to talk about Tesla evaluation. But from their valuation perspective. But EV is a completely new sector. So I think, Cedric, from that point of perspective, I think as a street, we still have to figure out who wins in this race. How, right now Tesla is the biggest player, probably the first mover advantage. And if they have decided to go vertically integrated, yeah, they're rewarding. But if we let this industry mature 20, 30 years later, then we'll figure out what's the best way to extract value on the EV space. I think probably it is too early to judge on the EV side. And my thought. NVIDIA is more and more fully vertically integrated. It really depends on the cycle of the company. J&J is old, so is G. Exactly. I think that's what we're talking about. The Tesla I was trying to refer is it's a new industry. So yes, maybe I should have used the right word, that is dependent on the cycle of that company. Many of these companies that are now breaking up have been in those industries which have been there for for decades. So all these new industries probably will still continue to do all the operations themselves. And then they'll figure out, okay, how do we, break it up later on. We have seen that in semiconductor industry. And by the way, NVIDIA doesn't do full stuff right now. I mean, they are fabless. They don't build their own chips anyway. So, but Intel was fully integrated. They do their design, they manufacture the chips. Now Intel is now trying to separate out. And not separate. I think now Intel is, I don't know what Intel is doing, because they're also saying that they will now give the chips to and work with the TSM and have TSM build the chips, while Intel is also creating a new fabrication company. But many of these Apple and the NVIDIAs and the AMDs, all those spectacular companies, they're also not doing everything in-house. They're focusing on designing the chip and have the Samsungs or the TSMs actually build the chip for them. So, but I agree with you completely. It's dependent on the cycle of that business. Pharma, healthcare, aviation, energy, pretty old businesses. I mean, been there for decades. Some of these companies have been there for more than 100 years. So I agree. It's a cycle of that particular business. So EV, pretty new cycle. We don't know in the long term whether the fully vertically integrated will work out or the core competency focus will work out. Time will tell. So Johnson & Johnson split. GE came and said they are also breaking into 3 companies, which will focus on, each unit will focus on aviation, healthcare, and energy. GE became a big mess under Jeff Immelt. And when I look at the CEOs who would not go down as the best CEOs, 2 names come across me. One is Jeff, and those are great companies. And but those great companies suffered under not so great leaders. One is GE under Jeff Immelt, and then there's Microsoft under Steve Ballmer. I think these 2 CEOs, the companies would have been better without these 2 CEOs. And so now, after Larry Culp took over, he's been trying to change GE. So this week they mentioned that they will split GE into 3 separate businesses: aviation, healthcare, energy. They had already taken the capital, GE capital, out. They've already split that up earlier. And now they're going to split, the current GE into these 3. I don't know which one will still remain the GE ticker. Or was it aviation or energy? I can't recall. But one of them will retain the GE ticker. The current CEO will be the CEO and chairman of that company, plus he'll be the chairman of the other 2 companies, but they'll find their new CEOs. But surprisingly, GE has been like outperforming markets. It's been up 55% over last 12 months. We don't think about GE when we talk about investments. We never spoken about GE. We always talk about the great growth companies. But here's one company that has returned 55% over last 12 months. Don't ask me what they've returned over last 5 years. Not a pretty picture. But ever since Larry Culp came in and decided to revamp, I think market is now seeing that, yes, maybe with a separate 3 companies, GE could turn their fortunes. Am I interested? No. I don't think I'll have a bandwidth to study aviation and health sectors and anything. And lastly, Toshiba. Let's make it 3 in this week. Is they also plan to split. Both GE and Toshiba are more than 100-year-old companies. Now, Toshiba will focus on infrastructure, electronic devices such as semiconductors, and the third one will focus on flash memory. in more than 100-year-old company. Everything was in-house, all vertically integrated. Now these are like a conglomerates. Like GE is into some businesses which are completely unrelated. But now I think back to focused on what each of the company does best. One good thing for not, I'm a J&J shareholder. I was a GE shareholder, made some money in the last year, then got out because I'm like, either if I want to put on GE, I want to add more capital so that it becomes a taker that I really want to own, or I had to decide of whether I should. It was such a small portion that wouldn't have moved the needle on my portfolio. I said, okay, let's take the gain and sell it off. So no longer G shareholder, but I am shareholder in Johnson & Johnson. And I like this split because now their consumer product business, which is Band-Aid, Listerine, is a very stable business, but not a high growth business. The pharma and the medical devices are volatile, but could give a lot more growth. And now the street is actually rewarding these two businesses on a different valuation. Will accord a different earnings multiple or sales multiple. But now both of them are merged under Johnson & Johnson. They probably were not being valued correctly, and that is why Johnson & Johnson wants to split. So I don't know. So all I heard is it will be a no tax hassle split for the shareholders. So I don't have to worry about it. But I've been a happy shareholder for Johnson & Johnson. And I still like it. I'll still hold it. Ramesh says, I like stock split like Berkshire, Apple, Nvidia, Tesla, TTD. In this case, not a stock split, but it's a different businesses. Hopefully now, once you get, but this is more akin to and more on the similar lines like of eBay and PayPal. PayPal, high growth business, was shrouded under the blanket of eBay, which was a classified company. And yeah, it is growing, but nowhere near to how the online payment business could grow. So PayPal did the right thing by moving out of eBay, and we have seen the explosion in the valuation of PayPal after that. So similarly, over here is they want to make sure that some of those great businesses that are hidden under these conglomerates can get a separate valuation. So basically, if you split it into two, the sum of parts would be larger than the original one. That's the play here. Ramesh, I meant prefer this shows strong company. Definitely, I would say this does show that they do focus. They are aware that they are not being able to enjoy the same valuation. The high growth businesses are not able to enjoy the same valuation because they are stuck under the parent. So it's like it's a very smart kid, great kid, but minor, so has to do everything under parental guidance. And parents may not be that smart, but there's a limit to which that kid can do, because the parents can put a ceiling on it, right? Similar is the case here. The business could be great, but eventually being reviewed under the parental company. But now there's become separate, which I like it as a shareholder. Hopefully, if they split, again, split is, I think, it's a temporary phenomenon. All right. More questions before we jump into earnings. So let's talk about some earnings. I got 3 or 4 companies, portfolio companies that I want to talk about. Let's first talk about Roblox. Again, Roblox is an amazing company. We did a IPO review before IPO, did a deep dive on Roblox, have been bullish on Roblox, and not disappointed. The company has been doing great from business perspective. I don't know whether what shares has done. Shares have been volatile, to say the least, on this Roblox. It's been ups and downs, ups and downs, ups and downs, right? But from a business perspective and from the area that they're trying to address and what that overall area could become, if not chasing candles, but if you're chasing Roblox as a business, it's a good business to own. So latest quarter, the revenue increased by over 100% to 509 million. What else? Daily active users were 47.3 million, increase of 31% year over year. Not too great, not 80%, not 40%, but it in but combine it with the fact that last year the schools were all closed, no physical, schools are all online, no physical schools. So the kids were all at home. And the Roblox, their main target audience is 13 between 7 to 14 years. Now they're trying to expand into the college going students and the high, I think some high schoolers they still play. But now they're expanding into the high school and the college going students, that demographic as well. But still the core is between 7 to 14 years. And now all those kids are back into school. So the fact that they're able to get 31% year over year, I think that is still decent one. Comparing it with your last year. Similarly, hours engaged were up 28% year over year. Let's look at the commentary for management. I think I'm more interested in that. Engagement is our North Star. It's all about engagement. It's all about building that community, especially when Roblox doesn't build any of the games. They are just a gaming platform. It's a community that builds the games. It's a community that builds what you can buy in those games. So the community can only flourish if the engagement continues to stay strong. So engagement is our North Star. We are happy to report that the developer community earned over $130 million in this quarter and is on pace to earn $500 million this year. So the way Roblox economics work is they create the tools for developers to come and build games and the gamers to come and play games. And when they're playing games, they will be buying some stuff. They'll be buying some costumes. They'll be buying some weapons, maybe buying a virtual house, whatever. I don't know what all do they make. The idea is Roblox doesn't have to depend on themselves to make a new hit after hit. If they can enable the developers to make the best games, suddenly, they've expanded their dev team exponentially. Now, Electronic Arts, Activision Blizzard, they have to make the games. And that is now dependent on the quality of the people on their payroll. Roblox doesn't make games. Roblox makes gaming platform. And the way they make money is when the developer is made a game, when someone wants to play it, they basically pay to buy certain things. I don't know, maybe some games you have to pay to even play the games, but I think most of them would be free. It's just that if you can get additional features if you buy some stuff. So it's like freemium model. So when the players, they basically buy that stuff, all that money, actually portion of that money goes to developers. The other portion goes to Roblox as a company. So it looks like the developer company, the community earned $130 million. So as long as the developers can make money, they will continue to build better and better games. More and more games, more better for the users. That becomes a flywheel effect. And what Roblox need to do is to provide them with the tools and with the platforms which will help developers build better games, developers to monetize their skills. So, but the stock jumped 30% after earnings. Now, again, my theory was maybe, hey, it was good. But I don't think it was such a great that it warranted a jump of 30%. One reason could be because many of traders could have been short on Roblox, assuming that now the kids are back in school, so they should be having a less than the expected results. But surprisingly, it posted better than expected results, and there could have been some short covering going on. Again, just a guess, who knows what's true or not. And then we also saw some retail investors now suddenly looking at, hey, it went up, I want to get in now. If you're focused only on candles, and might have kicked some FOMO among retail investors. Maybe some folks have bought call options. We've seen last week, it's been the highest ever call option premium paid in decades, $29 billion. Some of them could have gone to Roblox. But again, I'm not, it is still a good company. Can continue dollar cost average, or you could, if you are doing an option. So we had a short put option, made some decent money on that one. We'll do it again. But it's a business that I want to own for a long term. Did you see Upstart? I've not, because I don't have position in Upstart, but I've been not too bullish on Upstart. But we'll look at it, what happened. So I'll keep that in mind. Did FB Now Meta help it jump? I think the FB or / Now Meta has at least given a seal of authenticity to the whole metaverse. But Roblox has been a good from a business even before FB made their intentions clear about the metaverse. I mean, I like their business model. And the only area where I had some concerns around the Roblox is how do they gonna grow their how will they move beyond their current demographics of from 17 to 14 years. But now they're actually taking steps to attract little older age group as well, because there are only limited number of kids on that. So you have to expand. If you want to expand your TAM, you have to expand the demographics that you appeal to. But definitely now being metaverse, I think will give a kick to all the companies that are involved in building games or gaming platforms. There is another one that we will talk about today. Maybe let's bring that up right now. We switch the order. Unity. And Unity is had their earnings. Again, one of the portfolio company. Reported income, which is up 43% year over year. Customers generating more than 100,000 reached 973, up from 739. So almost 25% increase in their high value customers. Dollar-based expansion rate is 142%, slightly down, but doesn't matter whether it's 144, 142, not huge difference. But the fact that 142 itself is big. I think there are few companies who are at this level. I know Snowflake's dollar-based expansion rate is high, but anything above 120 is a good metric for SaaS companies. From business side, they announced a new release. The latest release includes features like one-click package installation, configuration tool, and improved rendering support. Again, Unity is a platform for other companies to make games. So if you are playing some games, I don't know, Red Dead Redemption, whatever the new games are. I was talking to my daughter's friend because they were at our place for their competition. And I asked her, what do you play? Do you play Roblox? So she said she used to play Roblox, moved to another game. I'm like, okay, which game? She gave me the name of a game, and she showed me the website. And on the side, I see gaming engine, Unity. I'm like, okay, if you own both, it's fine. That's what I thought literally. Okay, if you used to play Roblox, now don't play Roblox, move into the another one, which is on Unity. Okay, I own both, Eddie. So a little research from the real consumers. I don't play any games, so I have no idea of what, and my kids, they don't play games either. But yeah, I was having conversation with her friend, and they said they used to play Roblox, but she's like, no, I've grown beyond Roblox. I moved to other games. So Unity, and there are two players in this gaming two big players in the gaming platform, Unity and the Unreal Engine, which provides the platform which other companies use to create these 3D games. So Unreal Engine is part of Epic Games, so it doesn't trade separately, but Unity is a separate, it trades separately. So again, I'm bullish on that. On the business side, all looks good. They're introducing a new offering now, Unity Gaming Services, a new platform experience that unifies the existing operate solutions for games and introduce new tools for cross-platform and multiplayer games. So Unity has got, when you look at Unity product suite, they got the operate solution and they got a create solution. Create solution will allow companies to create the games. Operate solutions allow them to manage, their things like who is buying it, how much, like a back-end management of the whole accounting and the financials, and you can get analytics from it, which portions of the game seem to be more interesting. So all that, how do you deploy it? How do you run it on different platforms? Anything that is required to operate that game comes under their operate solutions. Anything required to create the game comes under the create solutions. So they're adding more features to create as well as to operate solutions. Now they're also doing, now this we talked about metaverse. So now they're doing real-time 3D sports platform. They're launching it in partnership with UFC. So it's going to be the first real-time 3D sports platform from Unity called Metacast. They also announced that they're going to acquire Veta Digital, or Veta Digital, whatever it is. I don't know. I don't care, about what's the right pronunciation is. All I care about is, if you don't know about this company, you would have definitely heard about their work. So Veta Digital was the company which provided special effects, which was behind the special effects in Avatar movie, Lord of the Rings, and some TV series, which one, the Game of Thrones. So now Unity will acquire Veta Digital, again enhancing their capabilities to create more and more realistic looking games. So they announced their intent to acquire this company, and also this will become their largest customer. So maybe they're looking at, who knows, Unity could be looking at moving into the movie production side. The fact that they acquired this particular company that have been behind Avatar and a lot of Rings and Game of Thrones, and there are a few more other names over there. Some of them I haven't heard about it, but these are the big ones, with amazing animation graphics. So it's all good. From a Unity side, all good. What I didn't like is that the share price popped up like 30%. But from a business perspective, still great. I can't fault management for anything for now. So we'll continue to stay bullish on Unity. Zifty says, I got it on IPO day and try to hold on to it for long-term tax, but I'm afraid by next year, friends, it may be over. Should I lock the gain? It's a very difficult decision to take, Zifty. Again, I hope you're talking about, maybe I read your message later. I don't know if you're talking about Roblox or you're talking about Unity. But in either case, when I look at these companies, I'm looking at, hey, these companies have got way longer road in front of them. They can become much bigger from where they are right now. Could the whole market go down next year and these companies will go down? Possible. But will it happen? I have no idea. I've been waiting for this crash or the markets to go down for now 4 years. 2018. No, 3 years. I've been proven wrong for all the last 3 years. But glad that I didn't sell my holdings. I was a little more cautious when I'm opening bullish trade. And that is why I love options, is I don't have to make a decision to put a line in the sand saying if now Roblox is 100, if it goes below 100, I'm going to lose money on it. That's why I use options to reduce your cost basis. Roblox has got some nice decent premium. You don't have to decide that you want to sell it right now. If you hold it and maybe you can sell a, go ahead and sell a call at, what is that, 100, right? 130 has got a decent premium. 25% probability that it will hit 130. Or forget about it, let's say 135. It's got a nice premium of almost $2.80, which is 2.5%. Or sell a call spread. I mean, these are the tools available to us. And I've been using these tools to reduce my cost basis like crazy. It's easy to extract 12% in many of these stocks without selling the stocks. So even if the market goes down, at least I've gained 12% on it. Imagine if it is a dividend paying company which pays a 12 to 15%. Would you like to sell it now? Probably not, because I'm long term, I'm bullish about it. But these growth companies don't pay dividend. That's why we use options to generate our income, so that I don't have to decide saying, hey, should I sell it now or not? I want to hold this for long term, but I want to reduce the cost basis because I'm in the same camp. Markets are overheated. What if it could go down? It's fine. I've reduced my cost basis. So if it goes down, okay, I have not heard that much. In some cases, some of the stocks that over the years, my cost of owning has come down to 0. And they don't pay any dividend. It's just by using options. So now, even if they go down, at least I've reduced my cost to 0. So I will continue to hold them because I'm still bullish on those stocks. I'm not going to take a decision thinking the market will go down right now, because no one knows what market will do in next few months or next year. I've been waiting for it to go down for years. It hasn't gone down. Zifty, how do you buy calls? Or I don't buy, I sell. Because if you sell, you basically collect a premium. That premium goes for me to reduce my cost basis. I already sold call, but way too deep in the money. How to mitigate the covered call? So generally for these growth stocks, I sell call spread, because some of these growth stocks can go 30-40% higher. So I generally focus on selling call spread. so that if it becomes double, right? Say tomorrow someone comes and say, I want to buy unit, it could just double it. So I rather sell a call spread in these growth companies, sell calls in like Berkshire Hathaway. I'll sell call in someone else like a big ones like Apple, because I don't think anyone can buy Apple. So Manoj say, I'm new to options, totally new. Any guidance on where to start? So Manoj, I used to conduct an options boot camp earlier. I don't do that anymore because I just can't find more time. But we have all the recordings of the option boot camp on the website. Let me just maybe just put up a website and so if you go to the, okay, let me just show it to you and then we'll get into the next earnings. So I have all the recordings available on the website. So if you can, first thing is understand about options. Number two is don't get into the same issue that most of the retail investors is trying to use the options to gamble or try to pick a direction or try to swing it for the fences. It'll work as long as market cooperates. When market stops cooperating, doesn't work. So the website is optiongig.com. If you come to boot camp, so you should be able to see all. We have some 13 or 14 sessions we did. I've done it multiple times. So you should be able to see all of them here. Start with the first one. The first one talks about how you, as a stock investor itself, how you can still play in options, right? Newbie option strategy, acquire share. This is what I was talking about, is generating dividend on the stocks by selling call options and the call spreads. So yeah, that I would say this is the first. There are many other tastytrade.com is a great resource. I learned a lot from them. Steve says option inside a radio network is a great resource. I have it on my phone. I don't get time to listen to them often, but when I started my journey, yeah, that was one I used to listen every day. So there's a lot of information available. Just make sure you pick up the right way of trading options. Trade options to not bet on the market direction, but to reduce. I trade to reduce the risk, and which is mostly I sell options, not buy. So thank you, Steve, for the podcast reference.
Thanks, Vivek.
Do you mean selling bullish put spread? I do sell bullish put spread also. For example, I was talking, right? Because I'm not over bullish on markets anymore. If I'm doing any bullish trade, I generally am selling put spreads. I think last week also we talked about it. For example, Roblox, I had a bullish put spread we had a bullish put spread on CrowdStrike. We never get assigned. That's a different one. So we always, the stock stays on sideways, and we always, close it for a profit, make another one. I'm waiting to do the next one on a CrowdStrike. But yes, because now I want to conserve my buying power. If I'm bullish, I will sell put spread. If I own a stock, I want to reduce my cost basis on some of these high growth companies. Either I'll sell a call spread, or if I own, let's say 200 shares, I might sell just one call. Again, the idea is to reduce the cost basis. Okay, so the next one is Palantir. Total revenue grew 36% year over year, which was better than expected. Customer count grew 46% quarter over quarter, which is good, but we want to see this, the commercial customers, which is important when we are talking about Palantir, because their whole story, Palantir's got a great software, but right now they don't get same amount of valuation like other software companies will get, is because Palantir is considered as a defense contractor. And then if you're looking at a defense contractor, the street will put you under the same bucket like Booz Allen Hamilton or Sunstrand. So then you don't get the same valuation as a high growth software tech company. So what Palantir has been trying to do is to change the mix of the revenue that they generate from a government customers as well as commercial customers. So I like this, that their commercial customer count grew 46% quarter-over-quarter, but I want to see this growing more and more. Commercial revenue grew 103%, great, but this is from a smaller base. Okay. What else? Something of worth. Close 54 deals of $1 million or more. So if you look at Palantir, what's the valuation metrics that they have? Price to sales 34. Not cheap, but not like 70s, not like 50s, 60s, which many other software companies enjoy. Not like 100 plus, which like Snowflake enjoys. Right? So the reason is because they still derive a lot more revenue from the government customers. And if you are in a government, if you're kind of a government contractor, then there's a limit in which you can grow. So that is why Street is not valuing them as they value a lot of other software growth companies. So that's still a concern. But I'm still bullish on it because their software is great. They have to find and change the mix of their customers. And once the company actually does that, we should see the Street rewarding it. I think the stock got beaten down after the earnings. I think went up and then down. No, it actually got beaten down by 10%. So for me, I don't care what they do in one quarter or what might happen in next 2-3 quarters. But if the company directionally, if the company is going in the right direction, and if we can see some evidence of it, maybe it'll take a little more time, and I want to give that time. So I am still bullish on this company. The technology that they have is amazing. Zifty, the public does not know about Palantir niche, the group it in the same as other software. Yeah, the general public doesn't know about it. But I wouldn't say that the institution, I think the institutional investor will know about it. But yeah, it's not that as a retail investor, many people understand about how Palantir works, what their software is and how powerful their software is. But from a valuation perspective, because they have a lot more exposure on the government sector, Street isn't rewarding it as they will reward any other commercial software. That's why Palantir is focused on increasing the revenue from their commercial side. We still have to see more for them to do more and more about this. I heard the person who gave the earnings call did a bad job. It was too scripted and he didn't address any easy questions. That if that was Alex Karp, the CEO, then I have to worry about it. So I didn't listen into the earnings call. So I don't know what happens in there. And that's one thing which I have to, it's not Alex. Okay. So that's one thing which I want to do, but I will be, my target for next year will be to reduce the amount of stickers that I own so that I'm not thinly spread and focus on a limited amount of tickers. Right now, I think if I look at it, like I have positions in 101 tickers. And some of them are like 0.05% of the overall portfolio. Right? I just want to get rid of all of them. Yeah, some of them I don't even look at it, which is fine. But even the top 50 is is too big. I need to make some changes among my top 50 to make sure that some of those stocks are at least 1% of my portfolio. I still have the stocks in my top 50 that are less than 1% of overall portfolio. So something which I have to do is to reduce the number of tickers so that I can get into more and more earnings call. Palantir is one such. I want to increase my exposure to Palantir. So that was all about earning highlights. I think there was one more which came in hand earlier. Ramesh, isn't it in ARK funds? Okay, so thanks, Manoj. ARK is invested in it. Yeah, I don't know if it was in ARK or not. There's one more question. Upstart. UPST. Upstart was growing like crazy. Okay, including a stock price as well, but not looks like the stock price got challenged. What happened? Upstart earnings. So here's my thought on Upstart. I've never invested in Upstart. For me, I wasn't able to wrap my head around the immediate growth and the valuation that Street was according to it. So I didn't. I have no, I would say, no dog in this race. But the reason why I didn't invest in it, Upstart is a company that provides an ability for the banks to make loans to people which may not qualify going through the traditional FICO score, which is good and bad, both sense, right? I was one of those. If I had Upstart would have qualified me without having any credit history, but not the traditional methods or a score of looking at a FICO, right? So when I landed in US, for me, it is difficult to get a loan because I don't have a credit history. I'm making decent income. You can come and check my pay. You can go and check my paycheck. I don't have any other loans. So I'm managing my finances okay. But the traditional methods of evaluating a worth of or the financial acumen or the ability of a person to pay back their loans would just discard me. So I wouldn't get at a cheaper rate. So I had to build my credit history. But Upstart uses a lot more other stuff than just at a FICO score. So they use their AI algorithms to maybe look at the bank transactions. Maybe I would have qualified because they know I'm in a well-paid and steady job, and I'm able to contain my expenses. Probably if Upstart was there, then I would have qualified for a loan at much cheaper rates. So that's what Upstart does. But the reason I'm still waiting on Upstart, it was to, in their business model, the loans that they generate, basically they work with other banks who will then give the loans to these consumers. Right? Any company that is in this loan origination business, etc., I want to see what the results are after we have seen some cracks in the economy, some recession, some hardship in the economy. Over the last few months or years, it's been one-sided. Market has been one-sided, zero interest rates. Everything seems to be looking good. People are flush with money because they got a lot of, the stimulus money coming in, benefits coming in. I want to see how those, and hasn't been in, after becoming public, hasn't been in around markets for long. I want to see what's their default rate could be if there's a little strain in the economy. Is that AI software that Upstart is using is really that great? If yes, then I'll have a lot more opportunities to get into Upstart later. But if not, then could it be a GE countrywide kind of a company? So that's what I'm waiting to look at Upstart. I haven't done a deeper dive into it just yet because it's in a lending business, and I'm generally careful about lending business because the strength of any lending business, you'll know it only after it has passed through one storm. In a fair weather, everything looks great. It's sunny. Great, things are great. It's fine. You never know what the cracks could be in their AI lending platform unless it has gone through one rough cycle. But I think they've been growing their businesses, like the loans, etc., like 800% in some cases, I heard. But that's also, you have to dig deeper to think, are they growing 800% because they might have lowered their standard? Who knows? That's a study you have to do. But right now, I don't own Upstart, and somehow I feel, hey, maybe I missed that boat, but I don't want to get into FOMO of missing that boat. If it's a great company, probably we'll have another opportunities. What's the valuation right now for Upstart? So it's a $20 billion. If you compare it with some of the other credit services, oops, which are the big ones. Yeah, if Upstart could become PayPal, they will expand it to becoming, what PayPal does, or it become expanded beyond just the credit and lending, which I think they will some point of a time. Well, they can become double, 3 times the valuation where they're right now. So I don't want to give into FOMO. I still want to watch out how quickly can they continue to grow, and how do their default rates, what their default rates are once there's a little crack in the economy, because that will be the testament of their AI platform. Thoughts on mRNA, bullish about mRNA as a technology platform. So I don't want to get into the details of it. I think very recently, maybe last few weeks, maybe within a month, we actually did a deep dive on mRNA as a technology. That's when I actually studied it. And I like the tech platform that mRNA has provided in terms of what it can do for diseases, etc. There are multiple companies which are using that platform. Moderna is one, namesake ticker mRNA. Stock in the last few weeks has been beaten down. So that's where going with a put spread helps, because hey, I can only lose the limited amount because my forget about lose. I don't even know, because we'll roll it, etc. But my buying power hasn't expanded because it wasn't a naked put. But as a company or as a platform, I'm bullish about it. All right, last section, looking at I think one more left for review is NIO. Yes, NIO. So NIO is a EV company. Used to had office in San Jose, no longer have it, or maybe they opened somewhere else, but they closed down their office in San Jose. That much I knew. But NIO is a EV company mostly out of China. Now they're expanding outside. I've been in NIO for a few years. Pretty happy shareholder. Journey hasn't been easy. From $3 all the way to $10, way back to $2, all the way to $60. Now it is $40, $45. So it's been very volatile, to say the least. And that's where using options have been helping me in reducing the cost basis and still be invested and not trying to time the market and sell it, because I think I'm still bullish on the long-term perspectives of NIO. So let's look at their recent quarter earnings. It delivered 24,000 in this quarter. As comparison, Tesla did way more, closer to 250K. But NIO is a pretty small company as compared to Tesla from a scale perspective. So Someone, some investor was also dubbed it as Tesla of China. I don't know whether it'll become Tesla of China or not, but so far, from a business perspective, they seem to have been doing good. Almost 10,000 of those cars were made in September alone. Both are the record breakers for this company. Again, growing from a smaller scale, that's why these numbers were record breakers. From a revenue perspective, I love this trajectory on the revenue side. Sales are projected to grow 121% this year. And for the next year, close to 70% is being modeled. Operating income means their mix of their revenue and expenses, how they are doing. It's good if your expenses continue to decrease, but I won't mind even if their expenses increase. They're in a growth company. If they want to invest because so as to grow the business, it's okay. But looks like they're projecting a full year profit in 2023. So maybe, another in 2 years, they're projecting that they could be full year profit. And I don't think those details around whether probably it's going to be an adjustable profit, right? Not a GAAP profit. NIO and its manufacturing partners, they are actually expanding the factory, which will double their capacity to at least 240,000 vehicles per year. Right? But that means there will be some short-term impact on Q4. So earlier, when came about it, Street punished NIO saying, "Oh, your Q4 numbers, your guidance on the Q4 or in the next year will look weak." Right? So that's where the revenue growth was 69% model for next year. Say, "Oh, your growth is slowing." I think the stock went down. But then they realized that the growth is slowing because of this thing, which will be good for a long term. So if you are not looking at this company for just next 1 year, I don't care. If you are expanding, means your current operations will get interrupted because you're also making changes on your current factory. And that means you may not be able to deliver the same cars at the same growth rate in a near term, but that's a good thing to do for a longer term. Yeah, I'll go through that short-term pain. Also established a business in Norway and now started shipping their new SUV over there in Norway and will start beginning to sell it in Germany as well. So now moving out of China, international expansion on for NIO as well. So these are I would say the good part of it. Not so good is the adjusted loss actually jumped higher. Yeah. But like I said, I won't ditch them for it. Vehicle margin dropped because of the financing at a subsidized rates to attract poor people. And also the tooling depreciation cost, which is fine. It's not going to kill their business. So from a business perspective, I think I'll still give them more time. Like I said, it has been very volatile stock, EV, and it's got a competition is there, but so far so good. I still really like their BAS profile, battery as a system, which means they can sell the cars at much lesser. The price of the car can be very less, almost $10,000 lesser, because now you don't own the battery, but you just use it as a service. It means they qualify for some of the subsidies that Chinese government offers if your car price is less than a certain amount. So still bullish. I own NIO in my portfolio, have been holding it for quite a long time, and yeah, continue to reduce the cost basis. Right now it is 32 cents cost basis. Few more option premium I have to sell to make it 0? Let's see. Zift said NIO is also unpredictable when the crowd decides to rotate. So how do you sell covered call when the stock is low 40s to 30s? Can flip to bull and you'll be deep in the money like other growth stocks. So first thing, say if in a NIO I hold, let's say 200 or 300 stocks, I'll sell one covered call. Maybe one covered call and one call spread. Because again, I still want to enjoy the upside if NIO becomes double. So I own, I think, 600 shares of NIO. My cost of shares buying and selling is $10. But right now the cost basis, because I've been selling, also I've been, in some, because I'm bullish on it, I'll probably could also sell a strangle, $30, $35, and then a $50, $55. So NIO, right? So here's a transparency perspective. Yeah, I own 600 shares. I have December, these trades which are still open. I got a short put 30, 45. So that was a one strangle, 30, 45. Right? Did another one after the stock had gone higher, did another one 35, 50. Oh. Come on. Right? And then I have another covered call at 55. So if we really look at it, I got 3 calls. I got 600 shares. So if it goes to the moon, goes to 60, I'll still enjoy the benefit. But if not, whatever overall premium I can make out of this, let's say all these option premium trades is $550 of a premium. I might just close it at when I'm making $300, right? So that means at least reduce your cost basis by another 50 cents per share. You can do it often for 6 times or maybe 8, 9 times a year. You can extract some decent, a decent income and reduce your cost basis. It doesn't come cheap. The consistency is the key here. You may not be able to do it in one month, but like I said, I've been owning NIO for some time. I started with 100 shares in NIO, buy a stock, and then sell strangle or sell put, get assigned. Okay, then start selling strangles. If falls down, get assigned. Yeah, I'm bullish. I continue to do an option trade on it. So still, it's a 600 long stocks. I think maybe once I hit my position size guidelines, I won't take any more bullish exposure. But right now, I think I still feel okay. So if I can close all these option trades at the $300 profit target, then my cost basis will become 0. Right now, I have 32 cents as a cost basis. Yeah, but this is what I do. I will not sell all the 6. I won't sell 6 covered calls on it. Because like you rightly said, it could just go to 60. And I want to make sure I can participate in that growth. But if I don't do this, then all these these months, I wouldn't have been able to generate any income from NIO. But all these months have been great. Trading NIO, doing strangles on NIO, because it's been range bound. So that's what, you become a little more experienced on options. You use this as a tool to reduce the risk or to reduce the cost basis. Little known fact about NIO, Cedric said, they are starting a new they jumped up. They are starting a new generation of models early next year. Most capable self-driving system on the market yet, according to them. So actually, I've seen. I'm amazed by the capabilities of the Chinese EV not just EV, but the Chinese manufacturers on the capability of their self-driving system. I also went through a video of what do you call Zheng or Xpeng. This is another EV. Now I'm actually diversifying between NIO and XPEV, because started opening positions in XPeng this year. I'm like, okay, just from a diversification perspective. And I saw a YouTube video of the route that they're taken, completely hands off. And the whole video of, it was able to navigate with, among a regular traffic. It's amazing. Not only this, China is also ahead in creating and adopting a car-to-car communication. Right? Imagine that now we'll have a pervasive internet connectivity. Now, what if one car can start talking to another car and know where the other car is? And when you have an autonomous driving, then the car can decide and basically cooperate with each other when they're on the road. That would be amazing. We're not even talking about that in US yet. In US, we are still talking about we don't even have we haven't reached a level wherein we have a full self-driving capability. But there are a pilot that's happening in China. I forgot the name of that operating system. It starts with some C, but it's amazing. So I won't be surprised if you are saying, NIO is coming up with this model, which has got a most capable self-driving system. I won't be surprised, but because there's a lot of great work happening in China. In US, people prefer SUV and trucks. I'll go with Rivian. Yeah, go with Rivian as for a truck or SUV. At today's pricing, I won't. Again, this is just me. I won't go with the Rivian stock right now. NIO, does TOS keep track of lowering? Nope. TOS doesn't keep track of it. You have to do yourself. Because from a TOS keeps track of it, how it happens on the tax perspective. And what I'm referring to is not as a tax perspective cost basis. It's for me to know, okay, did these trading options really help me in being a long stock investor? I become much better buy and hold investor after I started doing options, because now I don't have to take a knee-jerk reaction to a short-term fluctuations. Now I don't have to think that if I don't sell it, if a stock goes down, oh gosh, I lost money. I mean, I will still be hurt, but I have always have an option to reduce my cost basis. So why have to take a knee-jerk reactions? Why do I have to react to every ups and downs in the market? It helps me sleep well. But what TOS shows or any other platform shows is what's from a IRS perspective cost basis, which means if I close an option trade, then that option trade has gone. They don't adjust that, hey, because you earn premium on these option trade, now your cost of owning the original shares have come down. No, because they'll treat it as a two separate trades, just like IRS would. Do you know how many NIO cars on the road? Tesla got 1 million robots running around collecting telemetry. No, Tesla has got a lot of a headway in terms of it being the first EV company. So NIO, what they just sold 20,000 in this quarter. We can figure out how many NIO has sold till date, but it is way behind. NIO total cars sold. So Tesla has definitely got a long headway, right? Because they are the first ones to be in this space. I don't know, where do I can find. So we shouldn't compare Tesla and NIO right now. Totally looks like NIO has sold 109,000 cars only. It's pretty new. It's a young company. It's a growing one. Yeah, Tesla's got amazing software. That's what Tesla is, a software company. They got amazing telemetry. They got a head start, and all this, wherever the computers have to decide what's the right thing, they need a lot of data. And that's what Tesla has, that tons of data. That's why the Tesla enjoys the valuation it does today. It's not a car company. It's a software company, and that's what getting the software valuation. All right, so that's all about earnings. Lastly, let's look at our option trade review section, see which one we closed this week. Okay, we went through that. Yeah, the trades that we shared, total trades closed were 5, 4 were profitable. The one which was not profitable because we had to roll it out. I was bullish on China internet ETF. Because of the crackdown, I thought that got punished too much. So opened a bullish position, gave ourselves room for error, but I think it fell even way below that. So I had to roll it out. Took a temporary loss, not from an IRS perspective, but will still stay engaged in this. I think once the whole Chinese internet companies start to come back up again, I want to have that exposure to that ETF. So that was one temp loss. All other 4 were closed at profit. Some of them reduced the cost basis of the shares that I hold. Every time you take another premium on an option trade, it's like you're generating your own dividend income. So last week, we actually didn't have a time to talk about this, but if we had spoken last week, we would have had these 4 trades which were open. EEM thought process is emerging markets, little exposure outside of US. It's been a good vehicle from options perspective, probably range bound, but now I'm taking a bullish exposure on EEM, but still selling a put. We sold it on September 28th. Strike price was 50.51. Actually, we rolled it out. I think we had it on starting from October. Didn't work out. Rolled it to November, and now waiting for EEM. So right now it is $1.45 is a total premium collected on this. And today I can close it at $1.10, which means it's making some money, but I'm still bullish. I want to hold it. If it goes below, I'll basically roll it out to the next expiration, collect more credit. If I recall correctly, we became bullish on this when it was maybe close to 54 or 55. When did our initial trade opening on this was? Hold on, if I can go back and look at the history on NIO trades, EM trades. There we go. 9.7 was our first trade that we opened on. 9.7. 9.722. Yeah, the stock was like 53, 54. Who knew? This was like a worst time to open the, in hindsight, it looks like that's the worst time to open because the stock after that has never came back here. Has never reached to same price point when I actually became bullish on it because we wanted to open up have a bullish position on the emerging markets. But because we gave ourselves room for error, plus then we also rolled it out. Now the trade is profitable, but I still hold it. Let him make a little more money. Otherwise, I'll roll it out. I still want to have a bullish exposure. Stock is still way below where it was when I opened the trade, but option trade has become profitable already. So next one is XLF. We have a 42.39 strangle. Again, the commentary was opening a strangle on financials, hold long shares. So I think some Zifty has, right? How do you reduce the cost basis? So no risk on the upside. But if you don't hold, then you do this. There's a commentary. Basically, those who subscribe to the trade alerts will get it. But anyway, the stock was $40. fairly, it's a slightly bullish triangle, 39.42. Let's look at what happened there. Where's the trade? Oh, that got closed. Okay, looks like I forgot to update it here. So when did we close this? Oh yeah. Okay. I missed updating it. So that's already closed. So we actually closed more than one trade. Again, the whole idea was this is some things like these, right? It doesn't need any management. You put it and forget it. You have an auto closing order, gets closed. And make some maybe a percent and a half, maybe 2%, takes in 30 days. I would say that's still decent enough. mRNA, there was a question around mRNA. Yes, we were bullish on it, mRNA. We already made some money in some of the previous trade in November, still continue to stay bullish. So opened a December position, but to contain the buying power, went for a put spread, which is $30 wide put spread. Means maximum loss in this could be, maximum amount that I have to buy it back will be 3,000, collected almost $9, means the maximum loss would be $2,100, even if mRNA goes to zero. So I didn't know at that part of a time that mRNA will actually fall down so much. So if you really look at it, it's way below our break-even point. So, but I still have a lot of time left in this trade. This is expiring on December. So I'll still hold it because I know that even if mRNA goes down here, I can't lose more than $2,100 on this particular trade. These are some of the trades that have gone wrong. I will start to manage it maybe next week or so, trying to reduce it, the cost by collecting more premium, so that even if you have to close it as a loss, we'll close this at a less loss. But more importantly, now it's giving me an opportunity to buy mRNA at a cheaper price. And I'll probably maybe I'll pick up some share at 230 or wherever it would be, take a loss on option trade, but buy the stocks at a cheaper rate. Zillow, we opened a trade on 3rd, very decent premium for a $65 put. Means for 6,500, if you buy 100 shares, 6,500, you actually shaving off $500 from the overall cost basis. So where is Zillow right now? So when we opened the trade, stock was at where? 66.44. It has fallen down from here, but our break-even point is 60. So that's okay. Even if it goes down, I'll be happy to take assignment on it. I have only 50 shares of Zillow, which I opened a position when it fell down. I could now build some more position on Zillow. But right now it's making some money, but that's okay. I want it to decay further before I close this option trade. If not, take a position. And my cost base is already reduced by $5 in this, which is like 13%. So I buy it at 65, got close to $5 premium, which is great. Oh yeah. Oh, so geez. Yeah, XLF. Yeah, I closed it. Oh, it is here. So the one trade that we closed from this one is XLF. A new trade for this week is Netflix. So Netflix would be open an iron condor on Netflix. I own Netflix shares. So it's a plain, simple premium selling iron condor, slightly bearish because it's had a great run up. So I have a more room on the downside. Premium is decent. It's a $20 wide iron condor. For that, you get close to 6.6, which is 1/3 of the width of a strike, which is what an optimum premium you should get. And I didn't have to go too far, didn't have to go too far away from a timing perspective. I own some long shares, so if it blows through the call side, I won't mind that. That will overall little bit good for portfolio. So when I opened the trade, Netflix was at 661. And I had no idea, it actually went from 661 to 682. But we got a lot of time in this. Even if it blows through the call side, you might think, oh, I lost on this option. But the reason I did it is it's okay. We'll still gain because I hold long shares. But if it does not, stays within this range, we'll have an opportunity to reduce the cost basis by another few dollars. So it's not the first time. Netflix, I've been doing it for some time. And, that's helped. Yeah, if it stays, and it's got a little wide range, right? Going higher is a good for overall portfolio. I don't mind it. Going low, my break-even point is at close to $603. So unless it goes below 603, it will still be profitable. So very wide range I have to operate on Netflix. So that's the last one. Overall, till in this meeting, we talked about 66 trades. Oops. And we have closed what? 62. So 4 are open, which is what you see up here. We'll see. Let's see what happened to these 4. Some would be losers, some would be winner. We didn't win all. We lost out of those 62. 12 have been loser. It is what it is. I don't know when I put up a trade. I don't know. I mean, we try to do the setup based on what the math suggests, and then try to manage it. And then I'll come and share. Okay, this is, let's say, bring one trade for discussion, and be transparent on know what happens on that trade. So that's it for today. That was the last section. Let's address some questions. Ramesh, if you take loss on option and buy stock before 31 days, that would be a wash sale. Again, I'm not a tax attorney, but I think from a taxation perspective, yes, but it will add to the cost basis of the stock that I own, right? That's how the wash sale works. Zifty, what strategies to consider to mitigate cash secured puts that are way deep in the money, like for Z? It keep going 20 more below my strike price. So there are ways in which we say how to manage your option trades that have gone against you. There are 3-4 strategies that we use. Safety, again, I don't think I can go through all of them. I won't be able to do a justice even if I tried to. But let me see, which one did we talk about it? Hold on. Not this one, small account, no. I think there are 7 or 8, trade management techniques. So number 7, so like I told in EEM, I roll it out, give ourselves more time. So if your Z is way below, if you can roll it out for a premium, maybe it'll come back up, give yourself a little more time. If not, there are other techniques as well. So number 7, we talked about it. Then we talked a little more advanced techniques in over here, trade-offs. Number 7. And where is that one? Yeah, I think it was. I see a lot of background noise. Let me mute everyone. Yeah, someone is vacuuming. Yeah, so you can look at a number 7. I think there was one more. Maybe did I miss uploading it? Or probably the heading is not correct. But we did talk about, or maybe I've covered all in number 7 itself, is how do you manage the trades that have gone against you without taking on additional risk? Right? If you are selling an options, you can actually reduce the risk without adding more capital. If you're only dealing in stocks, if a stock goes down, only way to reduce our cost basis is to put more money in, because then you buy the stock at a lower price, which will then able to reduce your overall cost of acquisition. But it means you have to put in more capital. But if you are selling an option, you can actually reduce your risk without adding more capital. And that's why I love about options. But if you're buying an option, unfortunately, there is no way to reduce the risk without adding more capital. That is why I don't like buying options, because you have to pick a direction. Stock has to cooperate. If it doesn't, there is no way to reduce the risk. I'm like, yeah, I would rather do in which I have a room for error. And then even if it goes beyond that, I can still reduce the loss or the risk without adding more capital. Okay, so we talked about it. How can we manage and what option plays when we have a full-time job? So most of the trades I do is like early morning, because my meetings generally will start at around 8 o'clock. So I would try to do anything before that. If doesn't have 8 o'clock, then I'll do it, but then I think the next good opportunity where I can actually open up my Thinkorswim platform and look at it would be around 12:30. So it does work out. The reason I do these kind of the reason I trade options the way I trade is because I don't want to babysit my trade. I cannot. So that is why I want to give myself room for error. I want to let the time do the work and put my closing order, and only worry about it if either you have done an undefined risk, and keep your position size small, so that we cannot look at a candles or minute by minute chart, because we got a full-time jobs. So that's why I want to just focus on what I can do as a retail investor, not as a full-time investor, just as a part-time, doing it on the side along with a job, and it pays the home mortgage. I think that's a decent enough. What's your thought on PayPal after 10% drops on earning? I'm bullish on PayPal. 10% drop came in because their guidance a little weak. But if you really look at the overall objective, what PayPal is trying to achieve, to try to become a super app and expand into different areas, I'm bullish on PayPal. PayPal, I would sell put, willing to buy a stock at a discount if you're bullish. Yeah. So again, bullish on PayPal doesn't mean that tomorrow, if I put a trade, PayPal will go high. That is why, like Ramesh said, I'll do maybe a put spread. I'm bullish on PayPal, but I'll still give, PayPal fall on 5%. I'll still be okay. But if it stays where it is, I'll still be making some money. All right, that's it for today. Okay, safety. Yeah, that's my objective with playing options. I don't like to be stuck in my computer. We cannot be. I mean, whether we like it or not, but if you got a full-time job or business, then you got to take care of that. And that is why I don't do day trades. I focus on, again, I try to be long-term investor, but use options as a tactical steps to achieve my long-term objective. Disney doesn't look good after earnings. Disney fell down. Again, I'm bullish on Disney, but Disney fell down because their Disney Plus subscribers didn't grow as much as. Did we not talk about Disney last week? I'm having deja vu moment, saying somewhere I saw 2 million subscriber growth is good, but not great. Or maybe I think I updated my Disney thesis document. There probably, that's something I wrote somewhere, the Disney earnings. Yeah, we can only cover a limited amount of earnings in the time that we have. So probably, I think probably I would have written my Disney thesis, might have updated in my investment thesis document, because I remember writing this down. The reason Disney got punished was because the Disney Plus subscriber grew by 2 million. Uh, 2 million is something that you should not ignore, but it's not that great either. And but consider the fact that we are comparing it with 2020, wherein people didn't have options. Now people have a lot more choices what they want to do with their life, and they want to go out, they want to party, they want to meet people in person. And that's the reason why the subscriber growth didn't grow as much as what street might be thinking, hey, your growth is now slowing down. But look at the other side. With the now the even kids getting vaccinated, that's a huge tailwind behind the Disney park. The parks should, with the economy reopening, the parks should see more visitors, and the revenue from parks should now start to make an impact on their P&L statement. Right? So the reason I like Disney is their COVID or pre-COVID, no COVID, they kind of play in both the segments. Right? So I am still bullish on Disney. We had a strangle on Disney, which I had closed it. Oh, Disney trade we had talked about. Now I recall I think in one of the previous segments, we had a strangle Disney trade that I've shared in this meeting, which we closed, but I'm still bullish on Disney. Went down 10% after earnings, immaterial to me. Because whoever is selling it, they might have a different objective. They probably want to make money on Disney in this year. I don't want to make Disney on this year. I want to hold Disney for long term. Look at the metaverse. We haven't even talked about that. The amount of what do you call it? The IP that they hold. Disney can also do a big role, play a big role in metaverse. NFTs. Now we are getting into a completely different economy. All the Marvel superstars, all the portfolio that Disney has, which people love, is amazing. They got a lot of tailwinds. They got multiple businesses that they can expand into. Businesses that we haven't even hasn't been talking, or that hasn't been even accounted for in their valuation. So while we might see some tailwinds, headwinds on the current one, there's a lot of other opportunities that is in front of Disney if management wants to pick up and pivot towards there. So that's why I'm still bullish on Disney. Sam says that is BS on super apps. Oh, that's on maybe on the PayPal. I saw what WeChat does in Shanghai. People are complaining of Google now. Oh, US will never allow super app. Oh, we'll see. I mean, slowly, the companies are expanding their offerings. Right. SoFi started with student loan. We're now moving other type of loan, and now doing stocks, cryptos. So we are seeing the emergence and growth of companies trying to do more and more on their apps. So I am still bullish. How do you think Disney can recover all the COVID park visitor massive loss? Disney Plus brought in some fund, but park is their differentiator. I'll have to look back at the numbers in terms of how much will they be able to recover or not. But the fact is that Disney Plus, there was a chart. I don't know which document I could put in. But if you look at the growth of the Disney subscribers and compare it with the growth of a Netflix subscribers, in the 2 years that Disney Plus has been around, it has grown their subscriber base We're faster than what Netflix has grown. Plus, Disney also has parks. Plus, Disney also have the other businesses that we aren't even talking about it. So I'm not saying that they will be able to cover everything, the next quarter they should be profitable. But the question is, hey, should we run away from Disney? No, I won't. And I will still stay invested, but I will continue to reduce the cost basis. Right? That's the main point. I don't have to dump Disney right now because it fell down 10%. I don't see big change that why they will not be able to do better, let's say in 5 years down the line. They got decent amount of things that they can do. If you have small kids and they want to go to Disney, we will go. Disney will increase the ticket cost and we will still pay. Only small fraction of publics know what to do with Disney NFTs. That's including me. So how can Disney make up for the massive revenue loss with these new initiatives? So Zivdi, so let's go back and look at maybe Disney balance sheet. Parking cost as well. People will cry, but I think they'll still go. There are some things that we'll hate, but we still got to do it because there's no other option. So Disney investor relations. Let's go to their investor relations page. Let's look at their where's SEC filings. Even false. No, I want to get the. How come that they don't put in SEC filings here right up front? Okay, there we go. Proxy earnings reports. Let's look at Q4. There we go. So, okay, so this is comparing with 2020. Let's go back and look at maybe a year. Let's pick up 2019. And let's look at what the 2019 revenue was. Because 2020 was pandemic driven and profit. Do I have a quarterly review for 2019? That will be better. Let's look at Q3 or Q4 19. Let's compare with that. So now we're looking for, not for the last year, but the Q4 2019. Okay. What was their business? So I'm ignoring the COVID side. Overall revenue, 19 billion. What's now? It's almost equivalent to that. And we don't have a parks revenue coming in now. I mean, let's look at what's the parks total segment. Oh, where do they break it down? There. The income from continue. No, I want to see this total different segments. There we go. Parks. Media, parks and experience. So media brings in 6.5, parks bring in 6.5. Just look at what they bring in this year. Parks is less. So I think, I mean, $1 billion less from what they did in 2019 should be easy to recover when everyone is now trying to spend, go out and get into a real life experience. Where can you get that? No one else can provide a real life experience like Disney can provide as a magical experience. with the kids. So I think I'm still okay with Disney. I have no concerns. It has fallen down 10%. Actually, we did a trade, it fallen down 10%. You know, what was a bullish trade? Yep. We opened a short put. Decent premium. Almost $5 worth of a premium. Opened on 11th. Yeah, after it fell down. Like, I don't see anything wrong in a business. Maybe this is an opportunity to take a bullish position. Markets will give you markets. So markets might be looking at, oh, it's how will they recover in the next 1 quarter? That's fine. I'm not looking at next 1 quarter. Cool. Yeah. So let's compare it with 2019, where it was the best. No COVID. We're still almost back to where no COVID, with the parks still not operating at 100%. So, and plus now in last 2 years, NFTs become a new business. That business side hasn't even been accounted for in its valuation. All right. So I don't know where I actually put in my Disney earnings analysis. It isn't in this document. Maybe I put it somewhere else. Cool. All right. I think that's it for today then. Next week, I don't think we're going to go earnings. So what we're going to do, my plan is to do a deep dive into a company, do a deep dive into one particular company, look at its business, look at how the company is doing, what the businesses are, and build our investment thesis on that. Because I don't think we'll have too many earnings. At least that's what I'm tracking for the next week. So we'll do a deep dive next week. And of course, the general stuff that we talk about in the markets will still be there. Check out Weave for Disney NFTs. I heard some news that there's something about it, but again, those I think are so new that it is difficult to put anything from a valuation perspective. Wow. So Weave is a separate platform. I would say what blockchain is Weave using? Is it using Flow or are they using Ethereum? Because I need to look at, where do I invest on the crypto side also? Flow is on my radar. I have to take position on that. So we'll get into the tech later, but yeah, again, so I think right now this whole NFT is ask me, I think it's too bubbly, but it has to crash, and then a few years later it will have to recover. So it will go through that cycle. But all I'm looking at is Disney has got such an amazing portfolio that they can do a lot of work in here. Okay, so Manoj shared something. Welcome to the world of digital collectibles. Oh, so this is all with Disney. But that's okay. But yeah, so maybe I'll look into it in terms of what are they using. Are they creating their own blockchain? I'll get into details of what Weave uses. Alrighty, I'm tired. Cool. I think let's call it a day right here. Thank you, everyone. If you're interested in crypto, we do talk about it, all about crypto on Thursdays. It's not such a long session. I can't have that much time during the weekday, but we'll try to cover what I saw on the crypto economy side. Like we'll pick up a stock and do a deep dive. In this recent one, we did a deep dive on Decentraland. So, which is again focusing on metaverse. So I had never looked at Decentraland, but I did it this Thursday. Wow. Looks like lucky. Oh, okay. It has nothing to do with me doing it on Thursday, but it looks like it's up like what, 30%. But I'm still bullish on this one. So if you're interested, maybe we can talk more about it, cryptos on Thursdays. Otherwise, I'll talk to you on next Saturday. Have a good day, everyone. Have a profitable week. And always remember, keep focused on reducing the cost basis and stay small. And we should be able to manage any type of a downturn in the markets.